So far this week, technology stocks have outperformed, with traders jumping back into the growth names that had been underperforming. And this is somewhat as we expected, with the Nasdaq trying to reset and launch into a new rally. The advance in the Nasdaq has come at the expense of cyclical and value stocks and other stocks that comprise the reopening trade. This kind of rotation has also occurred in part because of concerns over higher inflation. But be assured, the value trade is still intact, especially for the energy sector. Value stocks just got a little bit overcrowded, but the fundamental drivers are still intact. While some rotation has occurred, the three major indices of late have generally moved sideways while Wall Street awaits more economic and earnings data. So while Wall Street waits, let's see what's in store for the Dow and the Russell. And we're going to start off with a quick look at the SPDR's Dow Jones Industrial Average ETF, the diamonds, and the symbol is DIA. We're not going to spend too much time here because we just want to take a quick look at the recent trading. As you can see here, there's a bit of a topping process occurring right here. And you can see that this is only very slight in its move right now. And I think just money is coming out of, say, the diamonds, the Dow, as well as the spiders or the S&P. And that has this pullback here down to the 20 EMA, and we got a pop off of that. But as you can see down here into volume, volume is declining for the most part over a number of weeks, which is good, at least in a downtrend. And you can see that the fast line has come through the slow line here. We need to be careful on the Dow and the S&P because of this. I don't like when the fast line starts moving down too fast below the slow line. And if it accelerates, we could have some trouble. But right now, I think it's just going to be a normal everyday pullback. Moving here into the histogram, it's really not too deep at that point there. Again, not much happening. A little bit of money coming out and going into the other indices, meaning the Nasdaq and the Russell. Here in the price rate of change, we just have a sawtooth occurring here, like we've seen back here and back here. I think we're going to reverse pretty soon and head back here. But for now, a little bit of money is coming out, and you can see that in the RSI, we're at a moderately weak 53.39, and then the stochastics looks like it's coming down, and then the Williams as well coming down. But I don't see anything serious in these moves so far. I think just a little bit of money is migrating or rotating out of, say, the Dow and out of the S&P into the Nasdaq and the Russell. And so with that, let's go take a look at the Russell. And now we're taking a look at the 4-year weekly chart on the iShares Russell 2000 ETF, and the symbol is IWM. And we're looking at this because the sideways trading, which I referred to earlier, pretty much through this area here, say, and then this area here. We've been moving up and down between these bottom line and top line, this channel here. Not unlike perhaps, say, this area back here through there. This is a much longer channel, but you can see that sideways trading through that channel before we got a pop. And then back here in this area, moving through that channel more or less before we had a pop here. So I think we're moving through this channel, and I think a pop is coming, and I'll show you why. Moving down into volume, another, say, reasonable sign is the dropping volume. We're dropping that volume, but we're not necessarily dropping in price, so that's good. Now here in the MAC, you can see that the fast line has been coming down, so we have this divergence with the declining MAC, but the stock price basically is moving sideways. And this is good because we have the fast line and the slow line both coming on down here, and they're going to be looking to reset, say, in a few weeks or so. I say in a few weeks because the histogram bottomed out at that point there, and it still has a ways to go before it hits that zero line. So I think we have several weeks before that happens, and then that means that the MAC is going to have to wait a little bit of time, several weeks before it can reset. And I think the reset is going to be above that zero line. So there's going to be some strength to it. And if we do get a pop, there might be some magnitude to that upward run. Now, into the price rate of change, you pretty much see that we have that reset going on as well and near that zero line. So some sawtoothing is going to occur down here before we're able to turn bottom, base, and then head back up. But all is looking good for now, at least. And the relative strength is just moderate there, but you can see it's got a couple of bounces off of that 50 or midline. And so it looks like it wants to try to turn as well. You can see the stochastic is actually turning there. And then also in the Williams, a little bit of bottoming process here, and it's going to head back on up there. But I don't think the price chart is actually going to move for a while. We'll see if I'm right. I think it's going to wait for the MAC to bottom and base and then turn on up. But the subsequent run, I think, could be pretty interesting, and it's not too far off. So be patient. And for now, that's ChewDog Charts. Thank you.